Welcome back, everyone. Up next, we'll be turning to our panel discussion entitled Two Sides of a Coin, How Fintech Innovation and Regulation Can Impact Financial Inclusion. I, for one, very much look forward to hearing the perspectives of these leading thinkers about the interplay and prospects for collaboration between fintechs and regulators. Leading the discussion is our moderator, Spiros Margaris, founder of Margaris Ventures. And Spiros is a noted venture capitalist, senior advisor, and investor to fintech companies. He's the first international influencer to achieve the Triple Crown ranking, having been ranked the #1 international fintech, blockchain, and artificial intelligence influencer by Analytica. Spiros is also an author and a member of the board and senior advisor to a range of fintechs and organizations around the world. Spiros, we're very pleased to have you moderate today's panel. The floor is yours.
Thank you, Martin, and welcome everyone to this panel, Two Sides of a Coin, How Fintech Innovation Regulation Can Impact Financial Inclusion. I'm truly very honored to take part of the Innovation Challenge and to be today moderator. As we saw earlier with the finalist presentations, fintechs are ushering in a new era of financial inclusion, using technology advancements to develop solutions that are more easily accessible and customized for underserved populations. What is perhaps not discussed as much is the key role that regulation can also play in leveling the financial playing field. As a fintech investor myself, I'm very familiar with the dynamic between innovation and regulatory compliance. And I'm looking forward to hearing our panelists' thoughts and recommendations on this subject. Before we dive into our discussions, I would like to take a moment to briefly introduce our distinguished panelists. Please join me in welcoming Joanne Barefoot, CEO and co-founder of AR, the Alliance of Innovative Regulation. Joanne previously served as Deputy Controller of the Currency, partner at KPMG, co-chair of Trilliant Risk Advisors, and staff member of the U.S. Senate Banking Committee. Welcome. Next, we have Taufan Putra, founder and chief executive officer of Amartha, a fintech providing P2P lending for the unbanked population in Indonesia. Taufan served as the former executive advisor to the President of the Republic of Indonesia, as well as a consultant at IBM. Welcome as well. Then we have Telmen Gerelt, CEO of Art Credit JCC, part of the ARD Financial Group. Telmen previously worked as Vice President of Strategic Planning and Business Development at Mongol Post and has held corporate leadership roles at various international companies.
Thank you.
As well, welcome always everyone. Then we have Karen Miller, as Global Head of Leadership and Diversity Program for Women's World Banking. Karen drives the Leadership and Diversity Program for Regulators, amongst other programs at her organization. And last but not least, Brad Vallabhaneni, whose partner in White & Case Global Financial Service Regulatory Practice, where he represents both US and non-US fintech, banking, insurance, and specialty finance companies on regulatory matters. Thank you all for joining us virtually this morning. To start, I would like to lay the foundation for today's discussion and talk a bit about the role of fintechs and regulators as drivers for financial inclusion. 1 billion women worldwide are underserved and unbanked. Taufan, to set the stage, in your experience, what is the role of fintech in supporting women's financial inclusion and empowerment?
Okay, Spiros, thank you for hosting this discussions today. Hello, everyone. My name is Taufan. As introduced by Spiros, I CEO of Amartha, and we are the pioneer and the largest marketplace microfinance in Indonesia. So to answer your questions, role of fintechs in supporting women financial inclusion and empowerment. So what we do here in Amartha, we utilize technology to drive financial inclusions and women empowerment. Uh, what we see here in Indonesia, we seek to solve deep social economic problems, that is access to finance for the underpenetrated market. In Indonesia, with over 270 million populations, uh, in terms of the pyramids of the populations, majority lay down in the micro and small business. And these micro small businesses in Indonesia mostly run by women. So when we help to provide access to women and empower them to run the business, the impact is multiple. First, it's the business continue to run, and we help see how we micro small businesses build a resilience economy for this informal economy in Indonesia, and by providing access to a loan, access to finance. So far, we already empowered over 300. We already disbursed over 300 million loan, empower over 800,000 women micro entrepreneurs across the villages in Indonesia, and we see how the impacts of this loan is increase the livelihood, the welfares of the family, and uh, build a community more resilient. Maybe that's a short view, the way I see of the my view on your topics that we're going to discuss today. Thank you, Spiros.
Thank you. Telmen, let's expand on this. What about in terms of sex disaggregated data, knowing customers' user experience?
Thank you, Spiros. Pleasure to be here. Hello from Mongolia, land of blue sky here. But now it's nighttime here. As our financial group, we are involved in a various financial services. Yeah, starting from insurance and pension fund and loan. But we provide all our services in one super app. We say it's a super app, and it's called the Auto application. Based on our experience in the last 3 years, we could empower, we could support the women's financial inclusion. How? For example, in Mongolia, maybe in elsewhere in other world, women are much lower rate in terms of labor participation. So that means they hold the wealth very low. So in a traditional way of banking, it's very hard to them, for example, to get a credit, to get a loan from the banks. But in Mongolia, we have a very interesting fact. For example, women are much higher educated compared to their counterpart male. Yeah, for example, starting from the elementary school, 55% graduates are female, and then in undergraduates, it becomes much more, 67%. In terms of masters and PhD degrees, it's even higher for women. But unfortunately, because of the lifestyle of maybe our country's culture, they are sitting at home and they are taking care of their children. So that's why it's very hard to get the financial services in traditional way. In our art application now, we have 1.3 million users. That says one third of population of Mongolia and half of the adult population here in Mongolia. And we see that women is they have a very high necessity to get the financial services. For example, now 64% of savings accounts on our art application is women, and 61% borrowers are women, and they are paying very well. For example, when they get the loan, we have this repay grade based on the repay rate, they are very high compared to the male, for example. Maybe it's an interesting fact that in Mongolian household culture, even maybe the woman earns less, but they control their family. So we saw this trend in last 3 years on our data when we provided the financial services to women. So that's I think the fintech, especially in this COVID situation, we see here in Mongolia that because of the disruption in education system, women are first to care about their family, and they are not working, but they need the financial services and financial inclusion. So I think the fintech role to empowering and increasing women inclusion in financial services is very high.
Thank you. I think this. I think that might apply for a lot of countries. Those insights, in some ways or another. I will go further now to Karen and Joanne. What about in terms of lowering barriers to entry for underdeserved segments? Joanne, why don't you start?
Thank you. And it's wonderful to be at this great event. I'm such an admirer of Women's World Banking. If we sort of widen the lens and ask ourselves what causes financial exclusion, what are the barriers to access to finance for women and for any underserved segment, the answers are pretty obvious. If we were together, I could ask the audience, and people would suggest causes. One of them is just affordability, the cost of financial services. Another is access, the ability to like get to a bank branch or something like that. Another is credit underwriting standards that tend to be skewed toward people who already have means. Another is, in some places, the fact that payment systems are slow and expensive to work with, particularly across borders. And then on top of that, of course, there's culture and bias issues as well. And all of those barriers are being attacked by fintechs. Another is just making it easier to make good choices and manage your money. So we're seeing that fintechs across the spectrum are set on trying to solve those problems. And if they do that with a proactive mindset of serving women, which is a huge market, they've got the natural capacity just to reduce barriers and get more people into the financial system.
Karen?
Yeah, I just want to build on Joanne's points there that, we do see these common barriers for women accessing and using financial services across markets. And I would add some additional barriers that we see those lower levels of digital and financial capability and lower mobile phone ownership in a number of markets, less access to formal identification and collateral, and as Joanne noted, the cultural and societal barriers. So if we understand, those barriers, but also understand the untapped market opportunity for reaching and engaging with women clients. If I'm a fintech entrepreneur, I'm shaping a business model from the get-go that is designed for inclusivity. And I do not want, regulation to slow me down in my market opportunity. But I think this is where we're really starting to see joint progress from both the regulatory side as well as the fintech side in solving these issues, whether it is regulatory sandboxes or seen a really interesting initiative recently from the Central Bank of Egypt, where they're engaging with the fintech market and they've all come together to identify common problem statements related to solving for women's financial inclusion. And they identified as one of those problem statements that female sellers and small entrepreneurs usually receive payments in cash. So then how can the regulator and the fintech community come together to solve that? And this is where I think we're at a really exciting point right now for the engagement between fintechs and the regulatory environment to aggressively solve for the issues facing women and building a more inclusive society.
Thank you, Karen. Joanne, in your view, do fintechs, by their very nature, naturally gravitate towards inclusivity of underdeserved groups, or will it require intervention by regulators to ensure that they are inclusive?
I think it's a little of both. I do think that fintech startups gravitate toward more inclusive efforts. So many startup founders that I know are started their companies because they were frustrated with aspects of the current financial system, and very often the problems that they're trying to solve do drive toward more inclusivity and more fairness and transparency in financial health. And there's a classic pattern there, really, that disruptors tend to go for underserved markets. You know, when we've got, if you're familiar with the argument in the Innovator's Dilemma by Clay Christensen, the argument that the incumbents are locked in fighting over a more affluent segment of the market, and then you have an underserved market, and very often the tech disruptors are first serving that market that's less served, and then they come up from the bottom and topple the entrenched incumbents. But regulators have a critical role to play in this. They need to encourage fintech, and they also need to be careful not to accidentally crush out good initiatives that are coming from the disruptor segment that can look to a regulator scary or alarming. And if they see the opportunity to build financial inclusion and with it economic growth, which more and more regulators all over the world are working on, then they need to play a critical role in creating that regulatory environment. I know we're going to talk about how to do that in a few minutes. That regulatory environment that is friendly to innovation, that's going to be good for more people.
Thanks. As we heard earlier today in the fireside chat, only 7% of fintech founders are women. Do you believe increasing the number of women in fintech leadership positions would impact women's financial inclusion at all? Karen, I throw this question to you. If so, if not, why?
Well, I hope we all agree that 7% of fintech founders is being women is an abysmally low number, and that we need to be working on changing that, not just because of women's financial inclusion, but I think we've probably all seen the very well-researched benefits of gender diversity and gender balanced teams at all levels of an organization. Research study after research study after research study from academia, from McKinsey, from Credit Suisse, from BCG, they all highlight the business case for gender diversity, which equates to greater profitability, more productive workforce, greater innovation. And so we need that in order to be solving the issue for women's financial inclusion. And I reflect on the conversations we had in selecting the Female Founder Award this year. And we talked a lot about this in the interview process, particularly when it came to both serving the women's market as well as building a gender diverse team. And we would talk about, well, there are challenges in hiring for women in coding positions and engineering in these fintech companies. And, you know, several of the female founders were saying it's difficult to hire women into those positions. Then, of course, there's a pause because the sentence doesn't stop there. They, as leaders, then strongly emphasize that just because it may be difficult doesn't mean you shouldn't do it, for all of the reasons that we know, and because there's such a focus on driving women's financial inclusion. So I just tell that example to emphasize that whether you're looking at your internal diversity efforts or how you serve women clients and the connection between the two, sure, there may be things that are more difficult, but It doesn't mean you don't try, and because your payoff in terms of that profitability in building something really special that impacts your market, that's going to be tremendous. And so, you know, we absolutely need more women leaders in fintech. We cannot accept that 7% of female founders, but we also need to, congratulate leaders like Taufan and Telmen and these male allies who are leading these organizations and have that focus on women's financial inclusion. So I would leave it with a call to action for all of us to really invest in building that pipeline of women leaders and recognizing the value that gender diversity can bring in driving women's financial inclusion efforts.
Joanne, do you have anything to add to this, or you would like to add?
Yeah, I just will briefly echo Karen's point that there's so much evidence that gender diversity makes companies more competitive, more successful. Our organization, AIR, has recently brought in Nick Cook, who had been the head of innovation at the Financial Conduct Authority. And he's actually working on an article making this very argument that the sector will do better if it's more diverse. The other thing I would just add is the observation that finance is a very old industry that's always been male dominated. Tech is a young industry that, for whatever reason, got going with a male dominated model, and we put them together in fintech. They have a tremendous skewing toward male founders. And we need to remember that in the tech world, the founders dominate that industry. They are the ones that shape what it's going to be that other people aspire toward. We just have to do the things that Karen talked about to get more women founders in particular, more women at every stratum, but especially founders.
Absolutely. I will get to the next question since time runs. What are the three most important regulatory challenges regarding fintech right now? Example, Facebook becoming a financial service provider, money laundering, etc. Pratin, what are you hearing from the fintechs you represent?
Yeah. Thank you, everyone. Thank you, Spiros, and to the organization for having me. So I guess it depends on the perspective, right? If it's from the perspective of the industry, the perspective of the consumer, the perspective of the regulators, there are different stakeholders. But maybe I'll answer from the perspective of some of the companies themselves that are trying to innovate. First and foremost, I think one of the big issues is that the regulation around fintech oftentimes doesn't scale very well. While there may be de minimis exceptions here or there, generally, when you offer a financial service, whether you're doing it for your first dollar or your first customer or your millionth customer or millionth dollar, the regulations are the same. You need a license, you need to have your compliance framework in place. And for non incumbent founders, that becomes very, very difficult. And while some countries have implemented ways to deal with that, like sandbox programs or regulatory relief, the inherent nature of the non scalability of financial service regulation is a huge barrier to entry. And if we're trying to solve the question of the incumbent advantage versus a lot of new entrants, that's something that the regulators really need to think about, the scalability problem. The second is maybe a reputational one. It's this sort of reputational contagion. There are plenty of good actors, of course, in the fintech space that are trying to do all sorts of wonderful things in terms of diversity and inclusion efforts and innovation. But like all industries, when there are a few bad actors, it sort of poisons the game for everyone. And as a reaction, regulators oftentimes become very conservative in their approach and they become very skeptical of new business models. And so there's this issue of sort of guilt by association categorically with a lot of fintechs. We see this in particular with a lot of blockchain and cryptocurrency based companies that get categorized as very high risk or generally facilitating money laundering, and that's not true at all. And thirdly, this is more of a US issue, but there's still a lack of coherency in the way the regulatory framework works, given the federal system. Fintech is still largely regulated at the state level, but there are significant areas where there's federal regulation, and there is a significant lack of coordination built into the system and built into the political nature of the republic. But there is sort of an incoherent way of building a fintech company and operating within all of the states, given the patchwork of licenses and registrations one needs. And so there's this lack of coordination that serves as a friction to really deploying a fintech strategy coherently and consistently across the country.
Thank you. Now I'll get to the next question. So many thanks first for this insightful comments by our panelists. Now that we've established the roles of fintech and regulators vis-a-vis financial inclusion, let's turn to the interplay between the two and the challenges that can arise when the fast pace of fintech innovation meets the historically slow requirements of the regulatory system. To kick off this session, we have an audience poll. I would love to hear from all of you on whether you think fintechs are moving too fast, too slow, or exactly at the right speed to strike a balance between innovation and consumer protection. Let's see what happens with the poll, and then the questions will follow. I would love to comment, but I don't want to change the poll. It's kind of exciting. All right, of course. Let's just repeat the question again quickly. Are fintechs moving too fast, too slow, or exactly the right speed to strike a balance between innovation and consumer protection? Pratin, I will start with you. Do you agree the audience responds to the poll? And what does this speed mean for consumer protection?
Yeah, it looks like a little bit more than half think we're just right. Not too hot, not too cold. That's interesting. Again, I think it's a matter of perspective, whether you're a regulator or a consumer, or in particular, you're in the industry as a founder. I suspect if you're a founder, you think it's a little too slow given the various regulatory frictions. I'll say this with respect to consumer protection. There's always a friction between the freedom to contract and you know use whatever goods and services that you want as a consumer, and the inherent idea of consumer protection that sometimes consumers don't always have all the information they need to deal with the products that they might be consuming. Um, and a lot of consumer protection assumes a certain level of unsophistication in these products and ability to consume. So I think from a policy perspective, there's a couple ways to approach this while still preserving the freedom to contract and the freedom to consume without being too maybe overbearing on the consumer protection side. And I think it's actually more than a regulatory issue with respect to the industry. I think it's more of an education issue. It's not really a fintech issue per se. It's more of a consumer finance issue that lots of users just don't understand consumer finance. And when you think about the major purchases your average person is going to make in life, whether that's a car or a house or their education, there's huge financings involved with all of these aspects. And most people are not well suited educationally to undertake those sort of financial exposures. And so I think in order to preserve the ability to interact with these products, but also balance consumer protection, I think financial education and literacy is a big aspect to the solution here.
Thank you. What does this speed
Yeah,
mean for market competitiveness? Telmen, let's hear your perspective.
I was expecting the poll result exactly right, so it's same what I thought. So I think the I think it's for in terms of market competitiveness, the innovation when it's fast, then it's good, I guess. Because, for example, we see in Mongolia that Mongolia is very much dominated with the banking system here in Mongolia, traditional banking system. Over 90% of the financial market itself is a bank. So because of the fintech is coming, it not only drives within the fintech the market competitiveness, but also fintechs are driving the traditional banks to change their way of providing the service here in Mongolia. We see that.
Spiros, if I may add on, building on time, comment from Taman. So the way I see, I think I would lean to depends on the situation, right? So if we see it, if it is what type of fintech products that we provide to our customers. So if we talk about the uh, payment, savings, banking services, I think remittance, if it I would lean to too slow, because in country like in Indonesia, where majority is still uh, underpenetrated in the village and this low income customers. So the role of this financial technology is very critical to help to drive uh, financial inclusion, cashless society, and bringing more savings account to this low-income society, and other type of financial products. But in terms of lending, I think it's in the other sides, because we couldn't go too fast on the lending, because like this month we give certain amount of the loan, and then like maybe for micro businesses in our business, we start with $500, and then for 1 year. But we want for specific customers, we want to double it within 1 month or 3 months. I think it relates to the issues of consumer protections. We want to protect them so they will not overfinance, they will not uh, over indebtedness. So giving the right amount of the loan that can help them thrive, that can help them more prosper for their family. It's relevant when we're discussing on this the right speed, especially lending businesses. Yeah, so um, they're at the right pace, and follow the journey of these businesses, how they grow, and then eventually they will be at the stage where they have it make mature businesses to get bigger loan size. Yeah, that's my view from the player's perspective. Thank you.
All right. Now, I think we're running. I think the panel discussion. I think we have to go faster since time, we have so much to say. I would like to turn our focus to that balance we alluded to between encouraging fintech innovation and establishing safeguards. What might be the best approach to achieving this? What actions can regulators take to help maintain or even spur innovation? Joanne, maybe perhaps you can take this question and build off what you were saying. Just
Yes, thank you. So, my organization, AIR, is a nonprofit working on helping the regulators themselves modernize their own technology And we think that they are the key factor in whether we're going to see the full promise of fintech for financial inclusion and financial health, or whether we'll never realize those benefits because the regulation will be wrong. And I say that with no criticism of the regulators. As you noted, I'm a former bank regulator myself. They've been doing the best they have with the tools that they've had. But what we need to do now is digitize the regulators themselves. We need to adopt a reg tech or so-called soup tech, supervisory tech capability in these agencies so that they can oversee an industry that is rapidly digitizing. And that will help close the speed gap that we have between innovation in the industry, which is exponential, and innovation at the regulators, which has been linear. They're going to have to speed up. It's very, very hard for them. They're designed to be careful and slow and cautious, but they will accidentally choke off good innovation, uh, or will fail to catch dangerous changes that are also coming at us through new tech in areas like privacy and data security and fairness if they can't themselves develop sophisticated digital tools.
What can fintechs do to ensure financial system integrity and consumer safeguards? I would like to pose this question to Taufan to start.
Yeah. So, if I build on that question, so do I we there's some principles that we use in the way we're running the business and uh, protect consumer safeguards. Like we call it ISIP, right? Inclusion, stability, integrity, and protections. And how we implement that principles in our business. So inclusions, definitely what we do when we are running the business is we provide inclusions to the underpenetrated market, to open in access to those who don't have access to these financial services from from the formal in financial institutions. We in terms of protections, we ensure we provide loan, working capital loan with the competitive interest rate. So this will protect our consumers with uh, the right interest rate that they can get in the market, and also help them being healthier, managing their business and cash flow. And in terms of yeah, in integrity, how we build the products that is fair and with develop appropriate based on the customer needs, or working capital loan based on the needs of the business, the right size of the amount in terms of the loan tenor, the loan size. Yeah, I think that's some of the few the way I see how we build on the your that's questions, consumer safeguards and system integrity, financial system integrity. Thank you.
Thank you. Telmen, any thoughts? We have to keep it short, but we'd love to hear it.
Okay, so I think in our financial group we have this mindset because our founder CEO of Hasbank, uh, who's the CEO of our financial group, he established the first credit union here in Mongolia, first non-bank financial institution here in Mongolia, first micro lending bank here in Mongolia, and everything he created, he was challenging the policy, and he was going to the central bank and regulatory agencies, and he was cooperating with them as well. So that mindset is also we have here in our group. So we are really closely working with the regulators. For example, I think that the most of the time we spend, talking to regulators. We are organizing Investor Nation Conference, Crypto Nation Forum annually, and bringing the regulators and stakeholders and players in one table and sitting, have to ensure the system integrity and consumer protection. And also we are investing in customer education as well. We have an art academy. So I think in order to, to ensure these things, I think the fintech the companies should closely work with the regulators.
Thank you. A common theme thought throughout our discussion today that I've noted has been the need for partnership between fintech and regulators. To conclude our discussion, I would like you all to weigh in, short, obviously. How can regulators and fintech collaborate to achieve these goals of innovation and system integrity? Who would like to start?
I'd be
I
happy
can
to.
go ahead, Joanne.
I love it.
So when we think about the need to speed up and stay on top of all this change, there's two key things that have to be done. One is we need more space for experimentation. You can't innovate unless you can try things out and see if they're going to work, and much more collaboration. So we're seeing experimentation in safe spaces like sandboxes and regulatory labs and tech sprints and so on. Regulators all over the world are doing this. And those are also collaborative environments that break down the barriers between the industry and the regulators. And again, as a former regulator, I know that's scary to people to break down those barriers, but we won't be able to do this unless there's much higher collaboration. Regulators need to come down out of the tower and go out among the people and see firsthand how these tools work and talk with people and brainstorm with them to be able to keep up with the challenges and opportunities.
Thank you, Joanne.
Yeah. Joanne, I would just
Gareth?
add to that point then, just be open to what you may not know. And this goes on both sides. So whether it's the regulator not potentially fully understanding artificial intelligence and gender bias, or if it's the fintech understanding what really does it mean to think about financial stability from a regulatory perspective. Just be open to trying to understand. And as Joanne said, that collaboration and that openness is essential for us to move forward.
Yeah, maybe I also would like to add on that one for us in Indonesia. I think we are very lucky because our regulators is supportive and collaborative. Just like you mentioned, they're building a sandbox policy, a fintech lab like that. And the way I see in the bigger spectrum is the approach of the regulators in building the policy. First is we it's the definitions of risk-based principle, risk-based principle policy. So you're not as a policy maker, you're not exactly built point by point to dictate how the company should work to serve the customer, but more in providing them flexibility with focusing more on the regulatory based on the risk. That's first that the way I see. And second one is in terms of the policy making, build on if in a simple term is similar regulation for a similar function. So if you are running a lending for micro productive businesses, there should be a specific guidelines, and don't make it the same with other company who are running consumer based lending. So those kind of clear um, uh, corridors between each of the business model will help the ecosystem to continue to innovate and uh, grow. Yeah, thank you.
Thank you. If nobody has anything more to say, we will go to the Q&A, where we have Nitya Sharma from Women's World Banking to raise the audience questions to the panel. Nitya, what's our first question?
Great. Thank you, Spiros, and thanks for such an engaging discussion. So the first question from our audience today is around regulation. So traditionally, regulation plays a catch-up role to innovation. We see that in Kenya, regulators took a guarded risk, and that's when M-Pesa sort of flourished. So Joanne, maybe I'll start with you since you were commenting on some of this before, but opening it up to the rest of the panel. Are there regulators approaching innovation from the angle that puts desired impact ahead of ticking, sort of compliance boxes? And how can they be used to help foster sort of that lens of putting innovation and impact ahead of ticking compliance boxes? I know you were talking about that before, so I'll pivot to you and then open up to the rest of the panel. And audience, again, please drop in your questions into the chat so that we can allow our panelists to answer.
It's a great question. Again, I have great sympathy for how hard this is. The regulators have the hardest job in all this. They have to get it right. They can't try things and have them failing. They've got to get it right. So part of the answer, so yes, regulators all over the world are getting good at this. And part of the answer is usually they shouldn't jump in and regulate too early when something new and different happens. But what they should do is learn early and invest in their own understanding and education deeply, a lot, way more than they do today in most places, to really understand what's coming, watch it closely, and then be ready to move into almost an iterative role with the regulations to create the ability to be agile like the private sector is today in tech. And again, hard to do, but that's the model, I think. Rapid understanding, close monitoring, followed by trying to provide clarity and certainty to the market, because regulatory uncertainty also chills innovation.
Great, thank you. So our next question is around the idea of data privacy. So data privacy is top of mind for consumers, regulators, and legislators alike. Taufan and Telmen, I'll come to you. What steps do you think fintech businesses should take on this issue as you work through your existing compliance obligations? So when you think about data privacy, how do you see the role of fintech and the responsibility of fintech to address this issue?
Telmen, you want to go first? Okay, I can start.
Okay. Okay, Taufan, you go.
Yeah. Okay.
Take one for the team.
For us, definitely, our regulators, they have clear policy and corridors how the way we should protect our data security of our consumers. We follow the general guidelines and policy from our regulators. And the second one is definitely building on the modern security of the technology. It's continuously growing. We continue to learn and adapt our approach and continue to improve our data security. And the third one, definitely, there is a standards like international standards on data security providing by several others companies worldwide, and that we can follow as a guidance for us on building this protection for our consumers. Yeah, I think in a high level, that's the way I see, and definitely it's in us. Definitely it's our main priority, making sure our highest priority, making sure all the data protected in a very proper way. Yeah.
Thank you. Telmen, any thoughts from you on this?
Yeah, I'm agree with the top one. So in Mongolia, for example, of course, that the data privacy is very very high priority for the fintechs as well, and because of that, in order to provide the services, financial services, even in a fintech way, the companies behind that should should comply with the obligation imposed from the regulator. So in Mongolia, it's very strictly regulated. So we don't see many complaints from the consumers on that side. But of course, meantime, because of the innovation, uh, I would like to emphasize that innovation has to be very fast because on the other side we see a lot of like hacking attacks and something like that. So that's why the fintechs and the companies also need to invest more on security issue and comply.
I would also like to just add a point on this specifically for a woman consumer. And so, really ensuring that she understands what the data privacy policy is in a way that makes sense for her, and really putting her in the center of that equation in terms of consumer protection and data privacy. So it just for all companies and for the regulators, making sure that you really are putting the woman consumer at the center of that. And you may have the right types of policies in place, but does she understand what she is signing up for and what that means in terms of her experience with the financial service provider?
Great, thank you for those thoughts. So Prat, I'm going to come to you for this one. We've seen different regulatory models in many different markets around fintech, and some regulators think that regulation around fintech should be more entity-based, that is, supervising the specific fintech for what it's providing, rather than activity-based, so regulating sort of broad activities performed by all or most fintechs. What are your thoughts on that?
Yeah, it's a good question, and it cuts across sort of what fintech is. We've been speaking maybe in a hybrid way. Sometimes we're talking about the actual entities that are offering services, and then sometimes we're talking about the actual products, whether they're credit products or otherwise. But as a response, the industry will evolve where the regulations push them to. They have lots of lawyers and consultants to tell them how to structure their company in the way that molds to the regulations. So where there's entity-based regulations, there's always the ending result that companies just create multiple entities. Or where there's product-based regulation, there's always the restructuring of where the products sit. So I think it's sort of a mixture of both. It really has to do also with who the regulator is and where their competence sits. For instance, if you have a technology company that's entering into the financial services space, it may not make the most sense for the regulator to regulate the entirety of a tech company because of one product that it offers. And so I think there needs to be some rationalization there as to what product is being regulated, how it interacts with the overall entity itself. It's a complicated question, though, because it implicates so much, not only by way of the entities themselves, but the competence of the regulators, the way they've created a regulatory system, how licenses and charters work in that particular jurisdiction. So I think it's a little bit maybe more form over function. I think we should focus more on what the end result is, and less so maybe on the entity type that we're actually regulating.
Great, thank you for that. Any final thoughts from our panelists in terms of one takeaway that fintechs and regulators should leave this discussion with today? Very quickly, if we can just do a quick.
I'll throw maybe one out there that may be slightly controversial, and then let our time run. But I mean, we talk oftentimes about regulators being better regulators, and I think it's worth examining sort of the incentive structure around them. Oftentimes, they're rewarded for punishing bad actors, but they're not rewarded for incenting good behavior and creating more innovation and stimulating the economy. And so I think from a regulatory design perspective, maybe one of the points of attack we should think about is how are regulators incented in approaching fintech regulation generally.
Love that.
Anyone else? Any key takeaways to leave the audience with today?
I would just offer that when we think about RegTech, I think we're going to see, and regulators are starting to say, that in the next few years, they're going to do a 180-degree turn in many areas, from criticizing new compliance tech that they're seeing to instead criticizing old compliance tech. Some of the new tech is so much better at finding things like money laundering or credit discrimination than the old tools are. So the industry needs to adopt these new tools to get better results, and the regulators are going to start to push for that.
Great. Spiros, back to you. Thanks so much.
Yes, I have the final words, and it's a hard act to follow. I want to thank first the Women's World Banking Organization for having me as a moderator, although I didn't have much to contribute, but I want to thank the fantastic panelists for their insights and for the time they've given us. To sum it up, some few words I have from my experience. I believe innovation and regulation go hand in hand. We've seen that in the UK, where regulators, government, and startups worked very closely together, and the UK became the number one fintech hub in the world, which a lot of people copied the model. And I think that's the path we have to go, basically run together for a common goal. And we've seen that the economy grew through the fintechs and all the startups in the UK that were allowed to run, room for failure. When it comes to the very important issue of women in the workplace, the women that don't have, a lot of women worldwide, they don't have all the privileges men have. I think we have to start even in our Western world, where we see, when I look at boards or management and I don't see the diversity of color of women, I think they're missing out on the opportunity out there. They're missing out understanding their client base, which is very diverse, and Karen mentioned before, we need women to understand what women might read when they read something or see something, so we can adapt our regulation and those forms, so everyone out there understands them, not just men. I think we don't have, in the fintech industry, where I invest, we talk a lot about legacy technology from incumbents, but I think the big problem we have is legacy culture. That means we have to change our thinking, and all of us, everyone with his own personal way, should try to help the less privileged people, women, to maybe, in my position, for instance, helping women to start the ventures, to support them. But everyone has a way of supporting our community out there, and it's not about investing in the startups alone. It's maybe buying the products or supporting them. And I think there's a lot of work to be done. I think today we addressed some important points. We heard some great insights of if we support those causes that help women. I think that's I think for me one of the most valuable points I heard today, that it's an economic interest to help them. And the final words is, people ask me often about the legacy of fintech, and I don't think it's going to be user experience. It's not going to be great products. It's going to be helping the less privileged people, the unbanked, underbanked, to have a better life. A life we take for granted, but it's not something that everyone takes for granted. So That's my closing words. Thank you very much for having me, and thank you the great panelists, and thank you the Women's World Bank Organization. And I hope we all go home and try to figure out how we can make a difference. Thank you.